a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Deal hopes. Iran's semi-official news agency MER reports details of a draft agreement being discussed with the United States. Stocks extending their gains, oil sliding on optimism over that potential deal. And the Wall Street debut of the biggest ever IPO, SpaceX, set to begin trading after raising $75 billion. So let's get a check on these markets now around the world. We'll start in Asia with Winnie Su. Winnie.
Good morning, Bonnie. A very happy Friday from our region. Now, you can see that the risk sentiment is very strong, especially after the U.S. signaled the end to the Iran war. And also with these headlines coming through around the details of that potential deal. Now, that is really supporting the MSCI Asia here up almost 3%, with gains also supported by the lower oil prices and that optimism ahead of SpaceX listing later today. Now, you flip the board and take a look at the South Korea market. We have Kospi here leading gains again, but we did see these gains pairing a bit in the afternoon after our report that global banks are curbing the hedge funds leverage bets on SK Hynix and Samsung on the concerns around a potential pullback after such a blistering rally. However, the Korean won here also leading gains among its Asian peers as investors, foreign investors, finally turned into net buyers of Korean stocks today.
All right, Winnie, thank you so much. Now let's get over to London for a check on markets with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a day of hopes and dreams all across markets, even though we don't have that SpaceX IPO. We're seeing the Stocks Europe 600 up 1.7% and a rally all across short end bonds here in Europe, thanks to hopes for that U.S.-Iran peace deal and potentially a lower energy price. Now, what I find really interesting is, yesterday we got that ECB decision, and actually officials have been projecting potentially another rate hike coming in July. But we flip the board here, we can see that actually expectations for another rate hike have been falling precipitously over the past few days. And now actually traders are just seeing one more rate hike this year. And that explains that bond rally too, Bonnie.
Justina, thank you so much. Justina Lee in London. Okay, so just a few moments ago, we got details from the semi-official MER news agency of this 14-point plan. It includes things like lifting some sanctioned money for reconstruction. The US would end the blockade within 30 days. Iran would reopen the Strait of Hormuz under Iranian arrangements within 30 days. And then there would be a period of further discussion. So around the details that we had been hearing coming out, but it seems a lot more concrete now. Bear in mind, this does need to be reviewed by Iranian authorities and agreed to, according to MER. But we have seen a reaction this morning in oil markets and across the board, which already started yesterday when the president said very firmly that there was an agreement in the works. Mind you, we had heard that several dozen times before, but this time it seemed a lot more for real, if you like. So we're seeing New York crude trading below $84 a barrel, Brent crude 86 and change. The December contract is actually trading at $82. It's also down more than 4%. We're seeing gas futures down more than 7% in Europe. If you look at stocks, we already had that rally towards the close. In particular, yesterday, semis up 12% as a group. Well, that looks to continue today, potentially with the NASDAQ 100 pointing to more gains, as is the S&P 500 futures complex and Russell 2000. We're also seeing a massive move lower in yields today. We'll have a look at treasuries in just a moment. Let's get to some individual market movers now with Chloe Melly.
Good morning, Bonnie. Of course, space stocks are in focus today ahead of this much anticipated SpaceX IPO, and the market is expecting a blockbuster debut from SpaceX. And so this enthusiasm is feeding through into that broader sector, with all of those names up here on the board in the green, and Rocket Lab in particular up about 7% in pre-market trading. Moving on to Adobe, which is feeling a little bit of management uncertainty and is down on the back of that today. There's an announcement that the CFO will be leaving later this month, and this comes just a few months after the company also announced the CEO would be leaving soon. And so this overshadowed actually what has been strong results and a strong outlook for the company, and we're down about 4% there. And finally, let's go over to Europe, where European airlines are reacting to this potential peace deal with Iran. Of course, even if we do get a deal over the weekend, fuel costs will not come down overnight, but we are still seeing a lot of optimism around that travel industry, that travel sector, and we're seeing Ryanair, Lufthansa and IAG, which owns British Airways, all in the green in Europe this morning.
Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, Laura Cooper of Nuveen and Rebecca Walser, president of Walser Wealth Management. Turning back now to this May report, Iranian media reporting that a deal with the US, including lifting oil sanctions, reopening the Strait of Hormuz, and US forces withdrawing from Iran's borders, is in the works and very close to getting signed. Let's get the latest with Bloomberg's Abir Abu Omar in Dubai. Abir, can you give us the latest that we've heard from Iranian media now?
Yeah, good morning, Vani. So over the past 30 minutes or so, we're getting these reports from state-affiliated media. Semi-official Mer is reporting this statement, a 14-provision statement that includes some of the demands that Iran has in this MOU. Now, two caveats that are important here. One, we do not know if this 14-provision statement matches the one that President Trump has touted yesterday when he said that a deal is imminent and will be signed as soon as this weekend in Europe with the attendance of Vice President J.D. Vance. The second thing that is caveated is even with those 14 provisions that Iran has put through reportedly, it still needs to go through to the negotiating team and the government to finally be approved. So it's still subject to those final approvals. Some of the things that are mentioned in this statement include unblocking $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, and the removal of the U.S. blockade or the naval blockade in the Strait of Hormuz, along with some other things that we have talked about multiple times over the past couple of months. But the final stage of this deal would include discussing the highly enriched uranium in Iran, as well as what Iran has put through, again, reportedly, is the sanctions relief and the economic reconstruction program of Iran due to the damage that it has suffered because of the U.S. and Israel attacks. One other thing that has emerged as a sticking point over the past couple of weeks, Fani, is Lebanon and Iran in this MOU that it says, that Mayor says has put through, the government has put through. It says that the cessation of hostilities by the U.S. would include Lebanon. Now, Israel came out earlier today and said that it was not privy to the MOU that President Trump had mentioned. So we still have to wait and see. Murky details still in the picture. But what it looks like is that markets are reacting positively across the board. We're seeing Brent crude prices at around $83 a barrel. Those are levels that we haven't seen recently. And so the market is behaving quite positively when it comes to this news. But the important caveats still persist. We have to await final confirmation through the official channels that we have monitored in the past, Fani.
Exactly, and there will still need to be more discussed as well, Abir. But I do want to point out the VIX also trading lower today, below 19 now. That's Bloomberg's Abir Abu Omar. SpaceX making history with a record-breaking $75 billion IPO, valuing it at almost $1.8 trillion. As shares debut today, Elon Musk is on the verge of becoming the world's first trillionaire. For more, we're joined by Matt Bloxham of Bloomberg Intelligence. So, Matt, I mean, we're looking at something that is trading at more than 90 times revenue. And in fact, it was loss-making in the last years that we have information for. Will that matter to traders?
Not at all. I mean, I think it's going to be loss-making and incrementally loss-making for quite a few years to come. I think clearly, the market's pricing this on the future opportunity, but as you said, on a 90 times trailing sales multiple, it has a lot of valuation to grow into, and so there's going to be a lot of focus going forward here on the execution. A number of kind of key catalysts coming up. For example, the next Starship rocket launch, perhaps in late June, early July, takes on incremental significance because that's a really critical platform for a lot of the plans that they have for the future of the business.
We also have with us JP Barnard, Bloomberg senior strategist. JP, what signals are pre-IPO trading in Europe and also on the crypto platform Hyperliquid telling us?
Well, it's amazing, and it looks like that the stock is going to be up there between like 30 and 50%. And I mean, like it's open to debate how reliable those prices are on gray market that is notoriously thin in volume and mostly driven by retail traders. So just a couple of millions can move the price a big deal there. But still, like the sentiment towards that stock seems to be extremely bullish. People want to have it in the portfolio. Space is an exciting technology. It could be the future connecting point between data centers and AI on Earth. And people seem to anticipate that. And so valuations and all the talk doesn't really matter. It's the story that matters and the idea going forward.
Matt, the company says it can pull in $28.5 trillion in the future, the vast majority of that from AI and some from Starlink satellites. It seems a huge number, but then again, as the FT pointed out today, no one thought people would buy clothes online at one point, and look at Amazon now.
Yeah, it is a huge number. We just saw some of those kind of broker forecasts. Actually, and there are more optimistic broker forecasts out there, even on top of the Morgan Stanley ones. I think that there's a massive amount of an execution challenge here. They've got to execute incredibly well across a whole range of sectors. They've got to displace the likes of Anthropic, Claude, OpenAI, ChatGPT to be a genuine market leader in the enterprise AI space. And they're coming from a long way back with the kind of Grok platform, which has stumbled a bit in the recent past. So definitely there's a massive opportunity there for all these companies to kind of take hold of. But it's really down to execution now, and there are a lot of challenges ahead.
JP, when it comes to IPOs, the calendar often plays a role. Is that the case at all this time, though, given that it's Elon Musk and everything about Elon Musk seems to be unique?
That's a tough question. You're absolutely right. I mean, like the name itself, it pulls in a lot of fan base and a lot of people that have a lot of faith in his ability to make even the most outrageous calls happening. And I guess Tesla is proof to that sentiment. I mean, still, we are now in a very long bull run, and not just in terms of length, but also in terms of strength. And we have seen some really abnormal moves in the AI trade going upward, and SpaceX could just prove to be the latest one doing so. So in the short term, I guess the bullish sentiment will prevail. The question, however, is that whole AI trade is embedded in a bit of a shaky economic environment. I mean, we have the geopolitical issue. We have a new debate about if rates are potentially going up when inflation goes higher or proves sticky. So it remains to be seen if the timing, maybe looking backwards, was misplaced in a market that it was at the top. Or at the other hand, I wouldn't be surprised if AI proves to go even higher, and if this is just if we are just in the middle or even the beginning of the whole trade.
JP, just briefly, what are the implications for market liquidity? There's been speculation that some of the Bitcoin selling, for example, was in order to get into this IPO. What are you hearing?
Well, that's a debate that some people are making room for that IPO. And so cryptocurrencies, the Magnificent Seven weakness there could be something that is being sold to make room. Overall, the AI trade has proven over again that it's a winner-takes-all market, and that money is very happy to move very fast into the things that works, and is very happy to punish those things that don't work. So I'm not surprised if we see more of that brutal rotation. All
right, Jan Patrick Barnard and Matt Bloxham, thank you both indeed. Coming up, we're going to be speaking with Laura Cooper of Nuveen. She says mega IPOs have minimal return potential in the first year. She joins us next. This is Bloomberg. Futures pointed higher, oil lower now on US-Iran hopes. Of course, traders also bracing for the impact of SpaceX's IPO and what it might have on AI sentiment. Joining us now is Laura Cooper, Global Investment Strategist, Head of Macro Credit at Nuveen. Now, she says mega IPOs have minimal return potential for the first 12 months. Laura, before we get into the details, do macro traders care about the SpaceX IPO today? Is there a frisson of excitement? Will it make a difference to outlooks, for example?
Well, I think we're seeing a combination of FOMO and this embedded dip buying behavior that is really driving this robust retail demand. And it does matter, I would say, for macro watchers in the sense that these mega IPOs will be seen as a good barometer more broadly for risk sentiment.
You point out that the S&P 500, with all of these additions this year, potentially is likely to be more than 50% technology by the end of 2027. I mean, it's one thing if you're invested in the NASDAQ, but if you're in the S&P 500, would you hope to be a little bit less concentrated in tech than that?
I think it's just the nature of what we're seeing because AI is the dominant theme, and we are going to see this tech concentration increase even further. And I think the challenge for broader equity exposures is that even if we start to see, okay, this diversification, this broadening away from those tech sectors over time, then that's going to still leave the broader headline index, fairly sideways. Lots of churn under the surface, but these small cap companies, as they increase, won't necessarily have the same impact in terms of driving those headline gains to record highs that we have seen.
All right, Laura, as I navigate you through the alarm that we are testing here in the US, can I also point to some headlines just crossing now that the US and Iran are nearing a peace deal around the G7 meeting next week. Now, this is according to senior officials. The US and Iran edging closer to signing an agreement to reopen the Strait of Hormuz, and it would be a memorandum of understanding. We already heard from Mayor this morning some details of the proposal, which include 14 points that would need to be agreed upon before all of the sides are in agreement. Laura, what would an actual memorandum of understanding mean with the potential reopening of the strait within 30 days? Not immediately, but within 30 days.
I feel like we've been here before in terms of these headlines, but I think from a market's perspective, probably a limited relief rally on the back of this. We would need to see clear confirmation that a deal is coming through, but as well, we would need to see a normalization of flows through the Strait of Hormuz. We would need to see signs that supply chain disruptions are going to be, alleviated over time. But if we look at the oil futures curve, it's already about $85, $90 a barrel through the end of the year. I struggle to see that coming off quite materially, particularly given this 30-day time frame. And so that suggests we are still going to live with this persistent oil pressures through the end of the year.
I want to ask you one question about the Fed and the economic environment as well, Laura. You say that the next move from the Fed is more likely to be a cut than a hike in spite of the inflation overshoot that we continued to see yesterday with the PPI.
And it is a bit of a controversial call, certainly given the rates repricing that we have seen with markets tilting more towards hikes. But I think at this juncture, yes, we are seeing those upward inflation pressures that is being driven in part by the oil persistence, this tech inflation with software price pressures really coming in more materially. And as well, we are seeing signs of labor market resilience, which does leave wage pressures to the upside. But we think if this oil shock starts to fade, we will see that come off headline price pressures. And as well, we expect tariff effects to come off as well. So given that policy rates are already in restrictive territory, we think that we are going to see the Fed on an extended policy pause through the end of the year. We would really need to see a material de-anchoring of inflation expectations or some signs of wage inflation coming in more strongly, which is not our base case, really for us to have the view that the Fed will tighten into this energy shock.
All right, Laura, we have to leave it there, but thank you so much for joining us today. That is Laura Cooper of Nuveen. This is Bloomberg. The World Cup is underway with Mexico beating South Africa 2-0 in the opening match. But as Wall Street Week found out, this year's tournament is raising questions whether the commercialization of sports has gone too far.
Manchester local Andy Milne arrived in Miami ready to cheer on England.
I can't wait for that first match. When the national anthem strikes up, and I know that kickoff is 2 minutes away, and it's England against Croatia, and our World Cup is going to start, there's nothing like that feeling in the world.
This World Cup, it feels a little different, to say the least, because I don't think it's accessible. This is the world's game. This should be a platform for everybody that loves the game all around the world to be able to come, to afford to come, as they've done in all of the previous World Cups, and I've been fortunate to attend 6 World Cups. But we've got the issues of dynamic pricing, the secondary market, and basically, I think FIFA has decided that this World Cup is where they're going to make a stated $11 billion and make this a very exclusive World Cup rather than what it should be, which is an incredibly inclusive World Cup.
We're a capitalist economy, and we subscribe to the adage of supply and demand. I do believe that we will see many kids and many families that will still be able to go. I think it'll be through different routes. But by the same token, there is a market in this country for events. There's a market in this country to buy premium, and I'd say we're seeing what the actual ceiling on that might be as a result of this World Cup.
For more, we're joined now by Bloomberg's Simon Hampton. Simon, you can go to a soccer match, your local club in England, all of the major matches that happen relatively cheaply, right? I mean, Champions League even. Why is it so expensive to go to these World Cup games?
Well, I think FIFA's taken one look at the American market and said we can make as much money as we can over here. And they've stated they're going to try and make around $11 billion, which would dwarf what they've made in any other World Cup. And you look at the American market, you look at the Knicks tickets for the NBA finals at the moment, and they're astronomical as well. You look at Super Bowl tickets, they're astronomical. And I think FIFA looks at that and think we can have a slice of that pie.
Is it resellers or is it FIFA?
Well, it's a bit of both. So FIFA did price the tickets far higher than they usually do. Around, I think the group stages, the cheapest tickets are still double what they were at previous World Cups. But then they've also brought in their own resale market. And the tickets are going far higher on that as well, and FIFA takes a cut.
Is there any regulator? Because it feels like you'd almost want to boycott the games for this reason, and yet if you've been waiting all your life to go to a World Cup game, you can't do that, can you?
Not in America. So if you've got the money, you can go, but if not, you've got to pay a princely sum to get there. All
right, Bloomberg Simon Hampton, thank you. Tune into Wall Street Week with David Weston tonight at 6 p.m. New York time. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Deal hopes. The US and Iran edge closer to signing an agreement to reopen the Strait of Hormuz as G7 leaders meet next week. Stocks extending gains, oil sliding on optimism over that deal. And the Wall Street debut of the biggest ever IPO, SpaceX, set to begin trading after raising $75 billion. Let's get straight to these markets then, though, because this morning we got word from MER, the semi-official news agency of Iran, that there is a negotiation underway and it does still need to be reviewed and finalized by authorities in Tehran, but the draft has 14 provisions, including things like a permanent and immediate ceasefire of hostilities, full lifting of the naval blockade within 30 days, a reopening of the strait within 30 days. Now, again, we have heard much of this before, but it does seem to be taking shape in a more concrete way right now, particularly with the president coming out yesterday full of hope towards the end of the market session that this was going to happen. We're also getting word from officials that it all might get signed next week at the G7 meeting, which we know the president is attending. So you see this market reaction. Down more than 4.5% on Brent and WTI. Also down for the December contract, trading around now $82 a barrel in December. You have gas futures also much lower in Europe. Futures pointed higher this after a nice gain yesterday, particularly towards the end of the session. And adding to those gains now, we had semiconductor stocks up 12% by the end of the session yesterday. Space stocks also were clambering up the ladder before the IPO of SpaceX today. And if you look at bonds, we saw those yields drop pretty precipitously, trading now at 4.94 on the 30-year yield. That's an 8 basis point drop from yesterday, and 4.0232 on the 2-year yield. So pricing out about half that interest rate hike. Let's get to some individual movers now. Over to London and Chloe Melley.
Good morning, Vonnie. Today is, of course, SpaceX IPO day, and so we are looking at all of those space stocks that are very much in focus today. We are seeing the likes of Rocket Lab, Redwire, and AST Space Mobile moving much higher, and of course, it's because SpaceX is expected to be this blockbuster debut, and so we are seeing all of this enthusiasm around that industry feeding through into those companies. Moving on to Adobe, which is seeing some changes at the top. So the CFO is set to be leaving later this month, and this comes a few months after an announcement that the CEO would also be soon stepping down. And so we are seeing some weakness in the stock this morning and overshadowing what were otherwise actually strong results and a raised outlook actually from Adobe. And finally, let's go over to Europe, where European airlines are very much in the green this morning because of this potential peace deal with Iran. Of course, even if the Strait of Hormuz reopens soon, it will take quite a while for those fuel costs to normalize. But we are still seeing all of that optimism around around the travel industry feeding through into the stocks, with Ryanair, Lufthansa and IAG all in the green this morning in Europe.
Sighs of relief in airline executive boardrooms today, I'm sure. Chloe, thank you so much. SpaceX set to trade on the Nasdaq later today. Grey markets predict the stock will pop at the open. Pre-IPO trading in derivatives linked to SpaceX, for example, indicates a gain of anything between 30% and 50%. For more, Bloomberg senior market strategist Neil Campling joins us now. Well, that would follow the pattern that we see, right, Neil? So as soon as retail can get in, there's a pop, but it doesn't always mean that that pop holds. Is it a 50-50 chance that the stock ends up holding its first print price today?
Yeah, so it's a great point, Vonnie. I mean, I think if we look back, we did some analysis of 66 of the biggest US tech IPOs since 2012. And we found that on day one, 86% of those listings finished up on the day. So the first day pop is pretty well set for most tech IPOs. How they fare thereafter, of course, is a different thing. Dispersion comes into effect. And about 1/3 of the IPOs have actually ended up lower than their IPO price a year later. So the first day pop isn't necessarily indicative of where the path of travel will take, but clearly the encouraging signs are that in those grey markets, as you mentioned, it's looking higher. And given this is such a massive deal, that in itself is certainly an encouraging sign at this venture.
Jim Chanos calling this a hope and a dream IPO. Obviously, the company has no tangible profits, he says. Will he be proven right eventually? I mean, the loss last year was $4.9 billion, and we had almost that in the first 3 months of this year alone, but that hasn't stopped people before.
Very true. I mean, Elon Musk has a history of very, very big plans. So clearly, if you look at the infrastructure that's in place, clearly they've done a great job in terms of the space side of things. But to build out data centers in space, which is one of the main tenets of this, is going to be extremely expensive. So it's going to take a long time for this to come to fruition in terms of profitability. That is for sure. But the path to get there is going to require probably more of these deals like the one they've signed with some of the other frontier AI markets. At the moment, you've got OpenAI and Anthropic that are leading that race. But really, to build out infrastructure, XAI as the key part of their total addressable market is going to probably likely need to raise more capital because, yes, they have said they are going to burn through a lot of cash to try and bring this to fruition over the course of the next decade.
Neil, Elon is obviously going to become a trillionaire today, but he's not the only one who benefits, right? Peter Thiel's Founders Fund has a roughly 3% stake. Sequoia Capital are going to reap billions. Google has a $6 billion stake and also is renting in an arrangement with the company. So it's going to mint a lot of capital that will presumably cycle back into the market somewhere. Where do people think that'll go?
Yeah, it's an interesting point, actually. We've just been looking at some data that's come out this morning from Bank of America and from EPFR that's actually saying that we've got record tech inflows into the cash market. We've got record equity issuance and record equity inflows at the same time. So the liquidity is still in the market, which is a really encouraging sign. And it probably will help fund those other massive IPOs we've discussed before that are coming down the pipe. And with people expecting Anthropic to be one of the next ones. And don't forget, back in the day, Google actually bought 10% of Anthropic for just $300 million. So they've had a good capability of spotting the new tech trends for sure.
Neil, thank you so much. Bloomberg's Neil Campling there. Sticking with SpaceX then, Walser Wealth CIO Rebecca Walser says, we're participating come hell or high water, but our view is common sense. IPOs are often 85% emotion and hype, and SpaceX is all of that times 100. We suggest waiting roughly 6 months for insider lockups to expire and for the raw emotion to settle. Joining us at the desk now is Rebecca Walser, President of Walser Wealth Management. Did you have to fight your clients on this one, Rebecca?
Yes, obviously. I mean, I said, listen, token amount, great, participate all day today, but please let's just wait, because I think that this is so much emotion, so much hype. Space, are you kidding? Elon Musk, are you kidding? 555 million.5 shares at a set price. I mean, it's just unbelievable.
Do you own Tesla? Or what do you think of the sort of the Musk empire generally?
I think that the man is a modern day Nikola Tesla. He's a genius. He is, you know, his ability. I mean, when you're, let's be honest, Bonnie, when you are pricing in bonuses, if you can get a sustainable 1 million inhabitants on Mars, and that's priced into your pay package for SpaceX, I think that we're talking about an innovator who's charting uncharted territory.
So would you be concerned about Tesla? Does it thrive or strive if Elon Musk is further divided?
That's a great question. And I obviously do be concerned about any CEO who's got that much going on that's so disparate. I mean, Tesla is a data company. I mean, yes, it's robotics, but it really is a data company, all of the things that it's gathering. So there's going to continue to be a need for what Tesla does, separate and apart from SpaceX. But this is a new frontier, and I think that Elon Musk is a pioneer in it, frankly.
So what about the rest of the AI stack then? If you're interested in SpaceX, you're going to get in, but not for a while. Do you continue to invest in, you know, memory chip makers and, you know, other chip makers until then?
It's really interesting. It's almost like cannibalization if you think about it. So what we saw last year is the hyperscalers that are typically writing a little less than 30 billion in bonds actually wrote 121 billion in bonds last year because they saw, oh my gosh, this investment, this CapEx need is so high. We can't do traditional routes. It's something that we have to think outside the box we're going to have to do. So you saw that last year in the hyperscalers. Then you saw Google front run, you know, new basically stocks shares, which has some dilution effects, but it was oversubscribed. It was supposed to be 80 billion, it ended up almost being 85 billion. So they're trying to front run all of this liquidity evaporation that's going to happen today with SpaceX and then Anthropic and OpenAI. So I think on the one hand, we need the CapEx from the hyperscalers to continue. You're seeing Micron, you're seeing the traditional legacy, memory, storage, all of these things that are being affected, swept up because they still are required on the infrastructure, on the compute, on all of the things that require to run data centers. So those, you know, legacies are coming back into play, but they are demanding the CapEx to keep that valuation high.
Well, there you go. So then when you see a day where, you know, a Broadcom just takes a tumble, or, you know, a day where Korea is lower, does that start getting you a little nervous, or are you very, very confident in your thesis?
I'm extremely confident that we are at the very beginning stages of monetization, and that when we look back in even 60 months, we'll be like, wow, we were probably overall undervalued for the actual implications. This is going to change everything about everything about everything. And that is not hyperbolic. That is the absolute truth. But it is going to take time to transition. So I am concerned that people don't have the wherewithal and the grit to withstand the volatility that happens when you're monetizing a new frontier that you don't really know a true valuation.
Do you have clients that come to you and say, I want to be short this, all of it? I don't want any part of it. In fact, I want to be betting the other way.
Yeah, of course. I mean, we deal with a lot of clients that are looking for cash flow guarantees because they're close to retirement and they're saying, hey, I don't need all this volatility. But then the problem is, Bonnie, as much as someone says, I don't need to be, I can be on the sidelines, I just need to, you know, have my planning done. They see these outsized returns. They see the fourth industrial revolution in this frontier, and they just feel FOMO. Like, I can't live in this day and age and miss out. So what the solution is and to the amount of risk you can tolerate, participate. Otherwise, stay on the sidelines and just let's wait for the transition and monetization valuation to be more solidified.
And what do you do for those who want to hedge just a little bit? Hedging has become so much more complicated in this environment.
Yeah, so the fact is that we are tokenization of everything is the new wave, as we know. We are literally moving to digital crypto blockchain-based currencies, whether it's stablecoin, whether it's a mixture of all these things. That's the future. So what I would say is we must tether to hard assets. And so we will always be a believer in some kind of gold and silver position to hedge the risk that we're taking with the monetization, and we don't know where that value is going to come in.
Which is funny because gold, of all things, was staring at $44,000, just $4,300 just a couple of days ago. So, you know, and I know you worry as well about the resurgence of inflation.
Absolutely.
So what do you do if you don't want inflation to eat away all your Gold holdings.
So interestingly enough, gold is actually long-term a great inflation hedge. Obviously, if you go back in the history of time, anytime we've had any kind of Middle East war around energy, it has act as a risk-on asset because central banks use it for liquidity raise. So they literally will, even as they're buying, central bank policy is to buy, they will literally go and liquidate because they need liquidity to deal with the energy crisis and how they're going to deal with all of these other supply chain issues that they have. So it is usually a risk-on asset in the middle of war that deals with energy. But beyond that, if you look over time, obviously we got up to a high of 5,400. It's obviously retrenched back, but we're way off the 2,500, the 3,000, where it didn't go anywhere for decades. And it's really keeping up with the fact that the world is tokenizing and derivatizing all financial assets.
All right, Rebecca, good luck today. I know you'll be watching it, even if you're not participating until things settle down a bit. That is Rebecca Walser, president of Walser Wealth Management. Now to other top stories trending on the terminal this morning. European Central Bank Governing Council member Joachim Nagel says that the central bank is ready to hike again when it meets in July, if necessary. He says the fallout from the Iran war is proving too strong to ignore. High energy costs are having repercussions for other prices and are affecting core inflation. Global banks are curbing hedge funds' leveraged bets on Asia's top chip makers after a blistering rally this year, raising concerns of a pullback. Citi, JP Morgan and Goldman Sachs have raised the financing cost to take bullish wagers on SK Hynix and Samsung Electronics shares via swaps. Société Générale expanding into cash prime brokerage for the first time. The French bank has added around 20 people to its prime brokerage unit, mainly in New York. SocGen is likely to add more traders and salespeople as it seeks to widen the push across other geographies. Coming up, the US and Iran appear much closer to signing an agreement that would end up reopening the Strait of Hormuz. Details next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Iran local media is reporting that the U.S. will lift oil sanctions and the Strait of Hormuz will reopen this part of a memorandum of understanding. Officials tell Bloomberg that a deal could be signed during the G7 summit as soon as this Sunday. Bloomberg's Abir Abu Omar joins me from Dubai. All right, take us back, Abir. We got word from MER, the semi-official Iran news agency. What did it say?
Yeah, good morning, Vani. So look, a whirlwind over the past hour or so, but what we're getting out of this semi-state-related agency in Iran is this 14-provision statement. They're citing a person that is close to the negotiating team, and essentially parts of those provisions include what we've been discussing over the past couple of months or so. That includes the unblocking of the $24 billion of frozen assets, lifting oil sanctions, the unblocking of the Strait of Hormuz, the removal of the naval blockade within 30 days, and ending all hostilities. That includes also on Lebanon. And remember, Lebanon has emerged in recent weeks as a main sticking part for Iran, where Iran said it refuses to go back to the negotiating table unless hostilities by Israel on the southern part of Lebanon, where the backed militia by Iran, Hezbollah, is present. So Iran has refused to go back to the table unless those hostilities cease. And then Iran goes ahead and says, through, again, reportedly, this is not confirmed yet, it goes through and it says that the final agreement would include negotiations about the highly enriched uranium and a program to reconstruct Iran economically after the damages that it had suffered due to this war. So a few caveats to bear in mind here. One, this is not confirmed by official sources that we would have normally resorted to, like the foreign minister, the Speaker of the Parliament, or the president. And then the second caveat is that the MOU that is presented by MER is not, we don't know essentially if it is the same one that President Trump has touted yesterday when he said that a deal is imminent as soon as this weekend in Europe.
Right, because a few of those provisions had been red lines for the United States, for example, Abir. I mean, the permanent cessation of hostilities, which is something that Iran wanted, was never something that the U.S. was really willing to agree to. I also wonder about this $300 billion in reconstruction, not just from the United States, but also its allies. Will everybody agree? Perhaps that's why we're hearing about a potential signing at the G7. Do you think there's room for maneuver here still, that Iran would agree to something maybe a little less than this?
That is a very good question. And look, the other question is whether the U.S. would agree to this, because this 14 provision statement that Iran reportedly has put through includes a lot of concessions that would be in the favor of Iran. Now, a lot of the points that are addressed there go against what President Trump has said are his red lines. So he has been playing the highly enriched uranium being sent out and the halting of Iran's nuclear program very heavily over the past couple of weeks. And that is something he addressed that Iran is willing to accept. But some of the other things mentioned in these 14 provisions, for example, the unblocking of the $24 billion of frozen assets, that is something that President Trump and the Iran hawks in Washington have disagreed to settle to. But we also have the scoop that you have mentioned as well about the possible deal being signed on Sunday. Now, we know that the G7 meeting is happening in Evian later next week from the 15th to the 17th. Our sources tell us that a deal could actually happen. Those are European sources that have spoken to people on the Iranian negotiating team. But Vonnie, just something that is very important to keep in mind here that markets are not factoring in as of now is that this is heavily caveated, because the official Iranian stance as of now is that the deal has not come through yet. So we'll have to see into the weekend and into what our Bloomberg Scoop tells us next week's G7 meeting. Switzerland was also played as a possible place where this deal could take place. So at least that factors into what President Trump had suggested about the signing taking place in Europe. So the puzzle pieces are falling into place a little bit, but we have to wait and see over the next 24, 48 hours.
Yeah, the market started to turn yesterday when the president said he had called off what would have been a third night of strikes against Iran. And then with this mayor draft today, it does appear that things are at least gaining steam. Bloomberg's Abir Abu Omar, thank you so much. Coming up, we're going to get you set up for your trading day. It's going to be a big one. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Apart from the obvious, we have University of Michigan sentiment data out at 10 a.m. Eastern, a view on what the consumer is expecting and whether inflation expectations are staying anchored. Plus, we also get Energy Secretary Chris Wright speaking at the Bloomberg Energy Security Executive Briefing today. And the world's biggest ever IPO, SpaceX, starts trading at some point today, probably around lunchtime. We'll have full coverage here on Bloomberg. And we saw some of those space stocks rocket higher yesterday as we approached it. Now, they had been selling off earlier in the week, but for example, Rocket Lab was up 7%. It was just one of the space-related stocks that moved higher. Many of them were up double digits, Satellogic and so on. Adobe came out with earnings, and even though it beat and raised, it fell after the CFO is departing the company June 15th. The CEO also announced he would resign earlier this year, and just generally, investors have been punishing beat and raise companies quite often in this market. And ExxonMobil, well, you can imagine it's falling after reports of a draft deal under discussion with the US. Let's take a look at the macro picture, because in fact, energy was really the only sector lower yesterday, consumer staples to a certain extent as well. But you can imagine that'll be the same story today with oil, not just the prompt month contract, but also out as far as December and beyond, down more than 4%. Gas futures down more than 7%. And this is your picture for futures, higher after we had that massive rally, particularly towards the end of the day yesterday. The Nasdaq 100 was up 3.3% by the end of the session. Semis as a group were up 12%. You can see that looks like it might continue today, particularly if we get more details around this mayor report and whether it jives with what the US thinks is going to be that memorandum of understanding. We have the 2-year yield well down from this time yesterday, a good 8 basis points lower, in fact, pricing out a little bit of that rate hike. And the VIX, while not calm, is trading with an 18 handle. All right, good luck everybody today. That's it for Bloomberg Brief. Surveillance is next.